All right, team, let's jump into the afternoon meeting. I should be up on YouTube. Someone could post that link. All right, let me get through the disclosure here. Hey. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Thanks, Baba. I got stopped out of Pinterest today. And Apache. Hurts. Oh man, it hurts. It's bad luck, isn't it? I followed my rules. I've been in Pinterest as a swing trade here since July 5th. I think I'm kind of near that low that day too. This thing looked great above 20, started to deteriorate here a little bit. I was very disappointed, but have to follow my rules to get stopped out almost at lows today. Almost at lows today. So I got stopped out like below these lows here, below yesterday's low, below this low. So got stopped out of this Pinterest. Actually, I did not get stopped out near lows. I remember looking at this pins and saying to myself, well, this is why you follow your risk management rules, right? This is why it's important to do that. Because I got stopped out, I think like here maybe, and then it was bouncing and going sideways. But then this thing just completely deteriorated, like many stocks in the market today, because the breadth was so poor. So I'm like, oh, glad I got myself stopped out of this thing, because now it's 35 cents lower or whatever. And I'm glad I'm following my rules, and I made money in this Pinterest no matter what, and I did all the right things. And then of course the news comes out here after hours. It's up 15%. It's up to $21. And now is maybe breaking those levels that I wanted to break on the daily chart. So that's unfortunate. That is unfortunate, but it is what it is. There's nothing I can do about it. Is what it is. So I guess let's actually dive into the price action from today here a little bit. So, oh boy, another kind of crazy, somewhat stressful type trading day. Bring this down to make sure that people in the VTF can see it. I also, by the way, someone made a YouTube comment on a recent video. I think Amy, and I appreciate that. I'm still, I'm juggling different computers. I'm trying to work on quality of the broadcast, but I was told that I was too quiet there, but yet I was having alerts go off, and when the alerts went off, they were like very loud, so they were like blowing people's eardrums out or whatever. So I think I turned off those alerts. And I also think I maybe got my mic volume a little bit louder on YouTube. I hope. So more feedback on that is appreciated. So hopefully no more of those big pinging alerts going off while I'm doing the meeting. I just got to remember to turn off every single day. And also hopefully the volume is a little bit better. But anyway, let's jump into it. So PPI today, and just like the CPI from yesterday, the PPI today was not, I didn't think it was a good number. I guess the silver lining, if you will, was that the core number there on the PPI was in line, which still isn't great. But I had said going into the CPI yesterday that I felt the market would go up. It's still a little low on YouTube. This might blow people out now in the VTF. Am I getting louder? I'm getting louder. Am I getting louder? I don't know. Hopefully, at least there's no more pings coming through. Yeah, I did say yesterday going into the CPI number that I felt an inline number meeting expectations would lead to a strong market rally, and we actually came in super hot and didn't deteriorate. So just imagine if we were able to come in, going off yesterday's price action, right? Just imagine what this rally would have looked like had we actually come in line, and that was a hot number, and the market kind of rallied and did really well. And then the PPI today was hot, but the core number was in line. So we discussed a few things in the morning meeting. I was really concerned coming into today's trading session. just to repeat myself in the morning meeting, I had originally thought that the fact that we rallied yesterday was a really bullish sign, and it is. It's certainly a bullish sign, right? The CPI number came out; it was super hot, and at least we didn't get a repeat of what happened in June. Um, but I was concerned that maybe it was just a kind of a one-day bounce back, and that today we would see the real selling. And then when I saw how big we were gapping down this morning over a percentage point, it was seemingly confirming my fears. And then I was starting to think that the only thing that could bail us out would be a good PPI number. And then the PPI number came out, and it certainly wasn't good. But that core being in line maybe made it not the end of the world. Let's go back to our pre-market price action here real quick for the SPYs. So whenever we have an economic number, what I always want to pay attention to is kind of where we started from, right? Like you can go back to the CPI yesterday. With the CPI yesterday, and sometimes we had this initial weird uptick, but we started at this 382.40, let's just call it, and then we just broke down from there. So bulls really need to get you back above 382.40, whatever I just said we started from, in order to negate that CPI number. In order for the market to truly say, we don't care, it doesn't matter, they have to get back above that. And even with a really strong rally yesterday, we never really fully got back above where we were at 830, but it was still impressive, the degree of the comeback, and it looked kind of broadly bullish. But again, I was worried that the market was maybe just taking a day to digest that information, and that today would be the day that we might see real selling. We started with this big gap down. Things are not looking good. It's confirming my fear. We got PPI coming out at 830, and that PPI number, there was not a heavy reaction to it. The Qs reacted best. IWM basically did nothing. SPYs tried to uptick a little bit, but basically I'm just doing the same thing. I'm paying attention to where are we at about 8:30. Let's just call it 337.90, and then I want to see if we're able to hold above that. And on the small time frame, I just want to remember what number I just said. We'll call it 337.90. Sorry, 373.90. On the small time frame, I know we're going to open up very extended. So I'm thinking off the open, if we're able to hold up above 373.90, you could look for short time frame extension longs initially. But overall, I was feeling, and I tend to be on the optimistic side of things, big picture. I tend to be big picture on the bull side of things. I certainly was not feeling that way this morning. I was feeling pretty pessimistic about the market, the numbers, how we were gapping, and that if we lost where we started at 8:30, that it could really lead to a breakdown further. And then I was further concerned, going back to the daily chart, we had discussed for weeks now that this low could potentially build out a wedge. And that's kind of what was happening. I thought that the wedge would end up getting satisfied. Thanks. I thought that the wedge would end up getting satisfied on these CPI and PPI numbers, and they still kind of haven't. Instead, it's just turned into not really a wedge, but just kind of support and resistance. It's in the market that's kind of continuing to hold. So I was worried that we would lose yesterday's low, lose our 8:30 a.m. spot where we were already gapping down from, and then break down these pivot lows, and then that could lead to real selling. One of the things that I always want to pay attention to, and we did get that for the SPYs, right? We broke these lows. So I was certainly feeling real concern when the market got below those lows from the very end of June, beginning of July. Very concerned about that. But we didn't get confirmation from the Qs and the IWM on the same daily level. The Qs have been relatively strong. They're still, a good bit above this potential, we can call it a higher low from the June low. And the IWM, same thing here, still has not breached these lows, but the IWM got very close today, and the IWM was also very relatively weak. So I had my concerns. I'm still concerned, honestly, even after today. Today was not enough to alleviate my concerns, and I'll explain why in a second. We had a really good short call out on basically every indice off the 9:50 a.m. 5-minute bar high. The Qs, which were strongest, got back into it. This is exactly the type of trade I'm looking for potential trend continuation of the downside. Snap back to the 80 MA on the 5-minute chart. You get that little upside tail there. You're able to short versus this tail's high, looking for continuation. This is exactly the type of execution setup I look for trend continuation, in this case, downtrend continuation. Market gave it, we communicated it, some of us executed it, and initially here it was working really well. Then at lows, I actually called out what turned out to be, and I'm still disappointed with the IWM's performance, even at the end of the day here. But we did eventually call the IWM low at the same time. So first we called out this short, then I'm communicating this low here, and the reason why I'm communicating this low was because the market was now at 167 for the IWM. All three of the indices were extended, and they were extended into IWM support. Like going back to these same lows I was just talking about. Like this day, the low is 166.76. This day, the low is 166.73. So roughly into this 167 area. That's daily support. The market's extended into it. So we called out a support trade, basically, which is counter trend for these small time frames. And all I'm really looking for is a snapback to equilibrium. It's that same kind of counter trend trade. It is a support trade, but get your risk covered, sell more into the 80 EMA, sell more into the 21 EMA, hold a smaller percentage just in case the retracement up actually becomes a full-on reversal, which actually happened. So I think there were some really good calls on the market early on today, and honestly some really good calls with individual stocks. The key today, like we were just kind of saying as the market was closing, the key today was recognizing the relative strength, and where relative strength was actually coming into the market, and the many places where it wasn't. So first, the semiconductors, right? We discussed the semiconductors pre-market. We know AMD got upgraded. We know Taiwan Semiconductors had news. Taiwan Semiconductors was very sloppy off the open. When I saw this first bar, I immediately wanted nothing to do with it. AMD tried to be strong early. It opened up green, got slammed back down. I was loving that call out that Rock had on this low here for a bounce that eventually broke and failed, but you can still see good leadership from these semiconductors, relative strength there, and also Apple. Apple is by far my best name today, which honestly isn't saying much because like I said, the breath was so poor today. I'm in 12 swings. I was in 14 swings coming into today. And of the 14 swings that I had, I got stopped at a pins and Apache. Only 2 of them managed to be green today, even though the NASDAQ closed green. SPYs closed red, but down by a small amount. This IWM's down over 1%, and I still find that this IWM is a better representation of the overall market and market breadth. When the IWM is really lagging like this, usually that's when we're seeing our really bad market breadth numbers. But relative strength was the key. Going after those semi names and kind of going after Apple, which turned out to be really by far my best name. We saw this Apple relative strength early. I remember at like 9:40 or so here, the market was still going down. And I remember saying to you guys, well, look how extended we are, right? And this is why I always look for that like 15 to 30 minute low. Because when the market gaps down like this, it is extended, but sometimes there is selling. That selling is basically panic selling, momentum selling, people that just are, get me out the second this market opens. This usually can't last, right? This degree of extension from these small time frame equilibrium, you need sideways action, you need a bounce to come in. So when I'm seeing us selling really hard like this early on, I'm saying, guys, and this is why I don't like this short, by the way. And I get it. You can make a few bucks if you're a scalper and you scalp the opening momentum on gap downs to the short side. I don't like that as a trade. I think it's a difficult trade. It's hard to do with consistency. It's hard to buy markets that are very extended to the upside. It's hard to short markets that are very extended to the downside. You rely on per momentum to pay you, and usually, from my experience in trading, you don't want to rely on per momentum to pay you. So if anything, I want to see where the pivot's going to come in when we're selling like this. And I'm looking for it. And look, there's no clear signal of a pivot. Like we were just going down. This bar almost closes at lows. And then, we're kind of turned back up. But what I was saying was look at what pivots first. That's going to be where your relative strength comes in. And it was Apple early. You can see here the second bar on Apple had a little bit of a tail. Third bar on Apple was closing decently green. Go back to SPYs. Second bar, no tail. Third bar, new lows. Apple again, second bar, tail. Third bar, almost an inside candle, kind of starting to break up a little bit. So I was even saying aloud at that time, hey, it looks like Apple is trying to be a leader on creating a pivot point, and AMD was kind of doing the same thing. That's when Rock kind of called out AMD. I know this AMD low eventually broke, Apple's didn't. But even here on the pullback at 10 a.m., it was just another higher low, and then very quickly, oh wow, look, we're at highs. And I think I even said, like, when the market was when Apple was turning up here, if this market would just stop going down, this Apple could be at 145 very easily. And 145 happened, and then 146 happened, and then 149 happened. I mean, it was a heck of a move here in Apple. But the issue that I have with the market today that still makes me concerned, if you just look at the charts of the indices, you are probably saying to yourself, hey, this isn't so bad. We got through the CPI number, got through the PPI number. They really were not good, but look how well the market held in. We did not get a repeat of what happened in June, even though these were even worse numbers than we had in June. Market got bid up yesterday, market got bid up today, and like I always say, it is very notable. It's very notable when the market does the opposite of what it, like, air quotes, should do. So you get these really bad numbers, it should go down, and it doesn't. That's always very notable. And I'm gonna, if I'm just saying keep it simple, stupid, which is one of my favorite sayings in trading, then that should be kind of the end of my thought process, right? Yeah, you know what? The SPYs broke these lows, but they closed above them, and it's closing prices that is what really matters. And obviously, when it's breaking lows in real time, you have no idea where the closing price is going to be. All you know is that it's bad. But Qs, same thing. Never even got close to testing them. Closed for second time in a row. Got bought all the way back up. And even this IWM here, even the Russell here, which is still negative by a percentage point, this is not a bad looking candle. Market perfectly held support, snap back a little bit. We got a little bit of a tail here. I'm just, the one thing that's still nagging me in the back of my mind is how bad breath was. And I know it got posted a few times in the VTF. I don't remember what the exact percentages were, but the fallers in the market were significantly more than the risers, which, on a day where, forget the IWM for a second, but a day where you got the SPYs down 0.2% and the Qs here, Qs are still trading up after hours. Qs are up 0.4% right now, including, I guess, a little bit of an extra bit after hours. You look at that, and the breadth numbers should not be anywhere near this bad. But this is why, the IWM is such an important leader to me. So I'm still, the Bulls still haven't fully convinced me. I want to say that they have. Like, I want to be, like, super excited here. Like, oh yeah, look how well we got bought up in CPI and PPI. Let's look for upside continuation. And again, maybe that happens. I'm just concerned about the breadth. I want broader participation. There were so many things that just didn't seem like they were participating at all today. I know FCX was a call out that I really liked. This call out, kind of off lows, barely held the low here, but just no participation in this thing at all. Let's go through a few things. How did GDX end up doing here? This GDX, though, wasn't terrible on the snapback. Still a massive gap down. Still down 4% on the day, but well off lows. And this was a great call, by the way. I think that might have been Rock also that called out this GDX at lows. Love this trade. Extended on the daily chart by a large degree, extended on the 5-minute chart by a large degree, maximizing volume. Doji candlestick coming in here, similar to a hammer that marks the low of the day. Like this, if anybody took this trade because it was communicated, I would want to swing this to the long side. But still down, 4% on the day. Financials were also trash, down 2% on the day. These things were barely nibbling above kind of the opening high. Like that's just not great price action. Obviously, you had J.P. Morgan making things heavier. What did Morgan Stanley? Yeah, Morgan Stanley getting bought back on not great looking earnings is actually, I think, very notable in a positive way. The J.P. Morgan thing with the suspension of the buyback was very concerning. Energy was able to catch, I guess, a decent bid back. Most of these growth stocks were not participating at all. How did ARK close today? ARK closed down 2%. So considering that the Nasdaq was green, these growth stocks were just not participating at all. Like type up almost any growth stock. Peloton made new all-time lows today. I got stopped out of this Pinterest. Pinterest was breaking support, closing very weak, closing very low. Got totally saved by the market. Snapchat tried to go green early. It's still above this Maribozu for me, which is okay. But this thing was another name that was just very, very weak. So just, I don't know, a lot of broader weakness in the market, not a lot of participation has me concerned. Really seemed like it was the Apple show. Just the market cap of the stock is just so massive that it has such a big effect on the SPYs and the Qs. And again, you did have other mega cap tech acting strong. Recognizing that relative strength early today was the key to trading today. And again, just to repeat myself one more time, SPYs, Qs, and IWM daily chart here, they're all fully intact still. But I want to see broader participation, and then I'll start feeling more comfortable. This morning I said, I'll feel more comfortable if they buy us up a second time. They bought us up a second time, and I'm still not feeling more comfortable. So we'll continue to monitor the situation. Like today was just like a very nothing type day for me, but I'm like disappointed. Like I look at like this type of price action in the SPYs, especially this type of price action in the Qs, the fact that we called out the low of the day here for the IWM and kind of low of the day for the market. When I look at this type of price action, I feel like I should have crushed it today, and I absolutely did not crush it today. It wasn't a bad day, but I absolutely did not crush it today. So that is all I got. Happy to answer any questions that you guys have. So I will scroll up into the VTF here a little bit. Google's adding Goldman Sachs CFO to the board. We should be getting that split finally soon. Is Buffett going to get more city? He might. I've been actually really curious to see how active Buffett's being now, because he hadn't been super active for a while. Everybody was whining about how much cash he was holding. And then obviously he's just been super active with Oxy. We're seeing that all the time. I said this at one point earlier today when I'm looking at this Apple strength. We know that Buffett was buying back in here and almost helped trigger this rally. These like low 150s. Well, if he's buying low 150s, is he willing to buy in the upper 30s? Is he interested in buying in the mid low 40s? Plus, the buyback on Apple is just so massive. The buyback on Apple can almost hold up like the entire S&P to some small degree, right? If you can't beat them, join them. Apple is so impressive, and I'm excited for this Google split. So is Uncle Warren buying more city? Grandpa Warren? It's Uncle Jerome and Grandpa Warren. I don't know why I get that backwards all the time. I should know my elders better. I don't know. Maybe. His bank certainly didn't look good today. That JP Morgan warning on the dividend suspension, just repeat myself for the 100th time. Not great. From DJ, I wanted to get long Apple when the Qs put in the 10-10 candle. Okay, pretty much at lows. That's when the IWM had its low. We've kind of called that out. Apple at 10-10 is showing a higher low, right? It's a good relative strength here with an inside and up. So this could have been an execution strategy for long. I wouldn't like this. Like, show me this chart in a vacuum, like without me knowing what the market's doing and stuff. I would not like this as a long here. I don't want to buy an inside 5 and up into the small time frame equilibrium in a stock that is down on the day. But I have to look at the market. And when you look at the market, you see the relative strength. The market's still making lows. The IWM is at daily support that we have, like an extension kind of hammer on a little bit of higher volume that's kind of coming into the IWM. Q, similar story that's pivoting here. That all of a sudden says to me, hey, I could actually take this inside 5 and up in Apple just because of the really impressive degree of relative strength that it's showed today. And Apple has showed relative strength every single day since Goldman did that price target decrease downgrade. We said it that day too, right? We said it that morning. So it looks somewhat bearish in a vacuum. Oh, look at that. You're repeating what I'm going to say. It looks somewhat bearish in a vacuum, but had enough relative strength to reverse. Should I be more liberal with my execution setups when playing off relative strength? Or is it better to focus on cookie cutter setups that I know well? Maybe wait for a better setup. No, yeah, so I like to trade there. And that's kind of what I was alluding to. And it's a lot of what I talked about in that class I taught yesterday. The market's very dynamic. So I totally agree with you because you're basically just I didn't read your full question, and you're echoing exactly what I said. In a vacuum, I wouldn't like this, but in combination with everything that we're seeing with the market, then this is a trade that you can go after, and that's advanced trading, right? Advanced trading is dynamic. Beginner trading is simple cookie cutter, and eventually, I think that very simple cookie cutter trading, even though I believe in keeping it as simple as possible, but trading without an understanding of how dynamic the market is isn't really going to be able to make you money in the long run. You got to be able to digest all those pieces of information together to be able to execute. So I like the trade in Apple there. It would have been a good spot. How is the market going to rally without financials? The market was doing it without the financials for years post the financial crisis. Just going off memory here. Like 20 like 2011, 2012, 2013. That was like all financials really were not participating in any of that. It took a long time for those financials to start getting back involved with the market. I don't know what percentage of the XLF is in the SPYs. We don't need the financials to rally in order for the market to rally, but we certainly would like to see at least stabilization, right? There's a city bloodbath tomorrow. Grandpa's coming. Respect your elders. Oh, we got the Google split tomorrow. That's going to be fun to see. It'll be exciting. Anybody else have anything for today? Otherwise, it's a short meeting, and I have a separate meeting at 5 o'clock. I got a few minutes here if anybody wants to answer anything. I'm tired, man. I'm just tired from this week. It's been keeping me real busy. But the VTF's going strong. I'm so happy with how well our team's been doing. Communication. I mean, we've just been super on point on these market movements, and I love it. So let's keep that up. All right. Well, if no one else has anything, I will wrap it up for today. Okay. All right. Well, good night, everybody. Hope everybody fared well today. It was like a slightly frustrating day for me today, but again, there were good call outs. If you focused on the relative strength, you could have that GDX, you could have that Apple. AMD was tough, but there were trades there. You certainly could have still made a few bucks for yourself on a trickier day today. And let's reassess this market. I really want to see the market prove itself to me with some better participation than we saw today. And we need to, in order for that to happen, we really need this dollar to chill out. We came off highs today, still above 29. I'd like to see a real pullback. I'd like to see a pullback 28.40 in the UP. And I think that could certainly help this market kind of break out. And then for now, we're just kind of stuck between support and resistance here for these indices. Have a great night, everybody. See you tomorrow.